record this webinar as we're going along. Okay, welcome once again. The purpose of this webinar is just to give you a quick introduction to Autochartist. We are going to look at the main aspects of the application and just to give you a bit of background about what the Autochartist is and what you can expect to get out of using it. Right. If you have any questions, I'm sure there will be plenty of time at the end or when I start going through the application, just interrupt me. My question window is a little bit small, so I may not see your questions immediately, but I will try and answer them as quickly as possible to the best of my ability. Okay, people I know, Kian Singh, are you there? Can you hear me? If you can just quickly send me a text or something, just so that I can double check that everybody is following me okay. Obviously I don't have any sound feedback, otherwise I could be a bit distracted. Okay, we can kick off then. Let's start by a brief overview of what is Autochartist. First and foremost, Autochartist is a pattern recognition system. It is software that we've developed over quite a number of years. The idea is to find certain patterns that I would call non-linear, meaning no two patterns look exactly the same, but there are loose descriptions that you can use to describe these. There are lots of these kind of problems in the world. Mostly they solve using techniques like neural networks, quite heavy involved computing. Just to also tell you where we come from, myself and my business partner who started the company, we are computer scientists by trade and by our education. And we did a lot of research into using neural networks, complicated statistical techniques, and we saw that there was one sort of need in the technical analysis space. Lots of indicators were available, all the simple indicators that are easy to calculate by formulas, the RSIs, moving averages, all of those kind of things, and they were very easily available in the marketplace. But although there was a lot written about chart patterns at the time in the literature, there wasn't any tools available to help traders identify these chart patterns. So that is really the premise of Autochartist. We're looking for patterns, and out of these patterns really are the trade opportunities that we're looking for. So far, we are identifying chart patterns, Fibonacci patterns, and key levels. These patterns are all patterns that form or that have some relationship to support and resistance levels. Support and resistance are sort of imaginary levels that form as a result of market psychology. It's basically it's in the minds of the traders that they decide whether a stock is going to be undersold or oversold, whether it's time to buy something or to sell something. And it's the collective mental picture of all the traders in the market that together shape the price graph ultimately. And the patterns that we're looking for, patterns that form as a result of the mindsets of traders. a very, very important point is that Autochartist is not a trading system. We don't promote the use of it just by blindly following the up and down arrows, buying and selling. Trading systems you can buy on the market. There are black box systems, things that you don't really know what the insides of it do, but they just suggest whatever algorithms they use, they tell you to buy and sell. This is not such a system. These are not buy and sell signals. We only look at them as potential trade opportunities. Autochartist is a trade opportunity finder or scanner. And the idea behind it is that because chart patterns are, the theory behind chart patterns is so solid, it's been around since the 1930s, there are really good trading opportunities. So what we do is we uncover, we scan the market, we find patterns on the price graphs, and we view them as potential trading opportunities. And the intention is certainly not that you follow each and every one of them. The intention is that you use them as a starting point. You see, many traders start off, or they have a problem starting off because they say, I don't know where to start trading. You know, what should I buy? What should I sell? Why is one stock a better, a better opportunity than another stock? Those are not simple questions to answer, but at least what we try and do is we narrow it down for you. If you have 1,000 symbols that are traded on your exchange, you can't do analysis on every single one of them every single day. Therefore, if you have a smaller subset of them, where you can say, look at these symbols are where patterns were found, that means there's an opportunity that could potentially be ripening. Then use that together with your other types of analysis to decide, hang on, is this a time to buy it or is it not? So that's really the background of Autochartist. We've recently developed a new website, and then we've developed again, and then we've simplified it, and it's an ongoing process. So we're constantly changing and adapting our marketing material to suit our clients better. We're learning as much from our clients as they're learning from us. So we're trying to take their comments to heart and make it easier, make the whole experience trading with Autochartist easier. We still have our traders community where we post daily research on various types of instruments, forex, commodities, equities. We've got a weekly post there on the Straits Times Index, FTSE, and a couple of others. We're also looking at changing that in the near future. We want to potentially move towards a more visual approach where we post daily videos, daily trade opportunities in video format. But all of that is still to come. All I can tell you is that we're working on that 365 days a year. Our web application as it is currently, I'll show you the version that I'm going to show you today. It has been updated. There has been a few very good changes that we've made. The changes are not so big that you wouldn't be able to use it. So we've got another webinar session scheduled for the 1st of March. And hopefully by that time we will have shifted to the new system, and then it'll be an interesting comparison for you just to see, because there's a few very nice features that will also make your life a bit easier. Yeah, in this version, the new version has got a little bit more functionality, but let's call it the raw data, the patterns that it counts are still the same. It's just a different way of presenting it. So, just a thought about what would be a good reason to use Autochartist. It's like my business partner always says, there's risk in everything. It's just a matter of trying to put the odds in your favor, and that's really what we're trying to do with Autochartist. Different tools obviously give you different types of analysis, and all of these different types of analysis you can put a certain quality measure on that. But ultimately, the best way to measure quality is to measure success and to see how often does this product meet its targets. So over the last few years, we've looked at specifically, there's a big study we did over 10 years. It was probably 1999 to 2009, I think, end of December 2009. It was end of December 2009 we brought out the report basically outlining the overall performance statistics of Autochartist on Forex, a couple of Forex instruments, and we've done a few tests on equities subsequently as well. Basically what we found that with completed chart patterns, they reach their target levels roughly about 70% of the time. Now, this number varies under different conditions depending on what patterns you're looking at, which market you're in, but the overall average is 70%. Sometimes it's less, 65, sometimes it's more, 75. But that's really what we can say that the proof lies in the pudding. Look, it's not to be confused with kind of a return on investment figure. So we're not saying you're going to make a 70% return on your money. By no means, and not by any means, not by a long shot. But what we are saying is that 70% of our signals reach their targets. Now you can interpret that in any way you want. All I want you to know from this is that it's not you're not throwing darts at a dartboard here and just randomly giving you signals. They are worthwhile. The patterns price does tend to move in the way that our patterns suggest that it would. Also, I reiterate again, all we're doing is we are identifying the patterns. We didn't come up with a theory. We can take no credit for it whatsoever. All credit is due to the traders that have developed this theory since the 1930s. We are just the technicians in a way that have affected the art of identifying them automatically. One of our main aims at Autochartist also, we want to make sure that we keep our product and our service and the signals that we send to our customers as simple as possible and as easy to understand as possible. There is enough complexity in the world of trading. There's so many things that you need to learn about spreads and commissions and various different things that can happen in the market, stock splits, and it's really a minefield of information. Our approach is to give whatever information we give in a simple and an easily understandable and an easily digestible format as possible. That's why we've made our application visually oriented, so that you could literally just have a look at a picture. You can also, the human brain, the visual cortex is such a powerful computer. It can look and look at something and understand that image in a few split seconds. So you don't have to read through a lot of stuff. You can really actually just look at the pictures to decide whether a pattern is tradable or not. It's also a nice tool for novice users, because a lot of people who start trading, they read a lot of information about technical analysis, and there's always a chapter on technical analysis in a chapter on chart patterns in just about every technical analysis book you find on the market. But people don't have more help to guide them to how to recognize these patterns. So Autochartist is a nice tool to use for beginners when they're learning about what do these patterns look like, and when are they good quality patterns, and when can we trade them or not. So what I'm trying to say is we've really done our best to keep things as simple as possible. Yeah, and you can see for yourself, there's three basic graphic elements to a graph. We've got support line, a resistance line, and a target level, with a few minor variations on the theme. We've also added a couple of additional features on our graphs to make it even easier to dissect the information. So I'm going to switch now to the application and just talk you through that. It's just taking a while for your view to refresh here. There you can see it. Got a question from Carol asking, is the data in real time? Carol, yes it is. We're getting all our price feeds in real time. However, the smallest granularity that we recognize chart patterns on is 15-minute granularity, and that's only for very, very liquid instruments like forex and some commodities. In stock markets, usually we only start the recognition process on 30 or 60-minute data because those instrument equities are often a little bit less liquid. So typically what would happen is you would see patterns coming through on the hour or on the half hour. In other words, as the next 30-minute or 16-minute bar closes, that's when you will see some patterns coming through. Like for example, on this graph, the latest patterns that we've got here are 6 o'clock. But hang on, that's Johannesburg time. Let me switch to Singapore time quickly. So you can see at the top here, there's an area where you can switch your time zone to wherever you are. It will then just refresh your view and adapt all of the pattern ends accordingly. So that was about midday today, Singapore time, that we got this pattern. Okay, so let me cover, I'm quickly going to, I'm mainly going to spend most of the time on chart patterns and then quickly give you a brief overview of Fibonacci. There are lots of similarities and some differences as well. I want to start just by looking at an overview of what it is that you're looking at, what does the screen comprise of. So this area where you see the graph, we call it the pattern display area. It's in the middle of the screen. It's supposed to be the most prominent, and that is really, like I said before, it's the picture that we want to get across. A picture that is supposed to, tell the story more than any in-depth writing or analysis. Some of the graphs get a bit small, especially longer ones. Let's see, this one's not that long, but it's getting a bit longer. And then if you click on the image itself, it will bring up a pop-up. It will just overlay this pop-up over your screen and just give you an enlarged view of the chart pattern itself. Now you will notice that these images are static. In other words, you can actually right-click on it, save the image as a file, and share it with your friends or colleagues. Excuse me. But once it has been rendered, obviously it won't change again. But every time that you request an image like this, it will have all the latest price data included. Now, this section over here, you'll see there's a gray dotted line. That indicates time, and it's also highlighted down here at the bottom. I don't know if you can see my cursor, it's the spotlight. You can see the time down here where it's highlighted. That is the time at which this pattern was identified. This particular one, 10 o'clock this morning. Let's just quickly see if you want to see what granularity it was. It was a 60 minute granularity. So since 10 o'clock, obviously a few hours have passed, 1, 2, 3, 4, 5, 6, 7 hours until the market closed. So every time an hour passes, you'll be able to see another candle appear, obviously while the markets are open. So everything that happened before the pattern was recognized is to the left of the line, and everything that is outlined but not colored in is to the right of that line. So in addition to that, you also see this gray block. There's an arrow that shows the direction of the pattern. If the expected direction is bearish, such as in this case, the arrow is colored in red. There's a red line, and the expected price target is indicated in red. In this case, 698. Below that price target is what we call the target region. Now, that statistic that I told you about earlier, that we have a 70% accuracy, that means that 7 out of 10 patterns we recognize reach their target regions. In other words, 7 out of 10 times it would reach this line over here. Look, that still doesn't mean it's an easy way to make money. You need to follow your own analysis, add your own analysis to this. It just gives you a really, really good and powerful starting point. Okay, like for example, we've got 1, 2, 3, 4, 5 completed pattern trading opportunities on the Singapore exchange. So whenever you click on an item in this list over here, the price graph at the top is refreshed to display that particular pattern for you. Now you'll notice there are two grids. The one says it's completed patterns, and the other grid here on the right reads emerging patterns. So what is the difference? There's not a huge difference between the two, except it has some bearing on the theory of chart patterns. So, let me first show you a completed pattern. Most patterns form with 4 touching points, 2 of them touching support and 2 of them touching resistance. Like in this pattern's case, for example, we've got this first point down here, the first touching point. The next touching point touches resistance, then support again, and then resistance again. So these 4 points really define the pattern for us, because with these 4 points we can determine the support and the resistance lines. We can calculate what the slope is of the slopes of these 2 lines are, and we can give it a name. We can say it's a rising wedge, and you can even get a little view of what it's supposed to look like if you click on the little eye next to the name. It gives you a little graphic description. of what this pattern is supposed to look like in the textbooks, together with some characteristics when it converges, when it forms what it suggests. So for the pattern to complete, like in this case, this is a completed pattern, it needs to break through the line of other support resistance depending on what the expected direction of the pattern is. So if the first touching point was on the resistance line, for example, it would turn this into a bullish expectation. But in this case, it's a bearish expectation. So whenever the price breaks through the support line, then we say the pattern is completed, and now there is the expectation of the target region. With emerging patterns, the price has touched all of the, it's got enough turning points on support and resistance lines to be able to form the support and resistance lines, and we can give it a name. This one is a triangle again. It's a textbook description of a triangle, two converging trend lines in opposite, with slopes in the opposite direction. However, an emerging pattern has not yet broken through its expected, the support and resistance in the expected direction. This one is a bullish expectation, so we're expecting it to break upwards through the resistance line, but this has not happened yet. Now, initially we added emerging patterns purely because we thought it'll be useful to give traders an early warning of, there's a pattern busy forming, look at it from the point of view, you can prepare yourself just in case it breaks out, sort of have a little bit of a, possibly you can take a little bit more risk on the direction the price might go in. But then subsequently, a few years later, we've learned that a lot of our customers use emerging patterns as swing traders. So they're looking at the actual range and looking at support and resistance as forming a range. And they just expect the price to be bouncing between the support and resistance. Obviously, in a converging or a non-trading pattern like this, you're going to run out of space as the support and resistance lines get closer and closer together. But like on a channel, for example, and the next one's a channel up, let's see what this one looks like. On a channel, for example, this could go on for quite some time. The price could continue bouncing off between support and resistance points indefinitely. So the swing trader looks at an emerging pattern and says, I'm expecting the price to go from resistance, in this case, back down to support. If it breaks through, then I would expect it to move further. But if it bounces off here again, then I would expect it to go back to the resistance line. So there are actually two ways in which you can trade these patterns. You can look at an early warning for the trend, or you can trade this range-bound movement as it is. We've got another question here from Carol again. How is it possible that SPH, there are two patterns completed at the same time? Let's quickly look at them, Carol, shall we? One of the things that you need to note is that it's this column here called length. The length of a pattern is a number that describes how many candles there are over which the pattern is formed. In other words, if I go to count them, there should be 31 candles from the start of this pattern to the end. So it's a pattern of length 31. And it's an ascending triangle. With ascending triangles, you're expecting the resistance line to be relatively horizontal. Let me give you a little picture of it. Ascending triangle is a normal triangle, except the resistance line is horizontal. But these